you just had some projections recently by your head of chief economist, right?
So it was the vice president of global asset management did a session for us in January. And it's actually kind of funny because the one thing I would say is the one constant in the mortgage world is change.
Yeah.
And so even some of the numbers that I've got on these slides, they've been updated and, the projections are updated. But I'd also say too, just on Brian's comments around, OSFI and what's happening. I was fortunate to be down in California 2 weeks ago with Dave Mackay and Neil McLaughlin, Greg Grice. They're the heads of Canadian banking, the two other individuals. And there's a lot of talk about what's happening in the real estate market and in our home equity division and the head of our home equity division and what they're projecting is going to happen. So as weird as it is, there's a lot of negative news, but I think it is challenge equals opportunity.
Absolutely.
And there's a ton of opportunity. And the Royal Bank is really optimistic about the spring market. In fact, our spring market actually starts today. And the OSFI meeting, I believe, is today. Too. It does feel like spring. So, it's weird because, and I'll talk a little bit about our promotions, but I think when we start with, where the bank is seeing what's going to happen. Yes, we're at the table, and I believe the meeting is today with OSFI about what's going to happen long term with our specialty programs and some of the things that Brian was talking about, the exceptions that we can do. There's a lot of talk, and we've been, audited a number of times from OSFI, and we're well within those guidelines. So I'll be really interested to see what comes out after this meeting today.
Yeah, I think they came up with.
I don't think it's going to be as negative as it needs to be.
I think they came up with really harsh things. And,
yes.
And I think they're going to. Yeah, they did it on purpose to scare everybody, and then they'll pull it back.
They'll pull it back, and I think there's still going to be some great opportunities.
Like the Chinese weather balloon, they just kind of went out
That's
there,
exactly right. We'll shoot some of those things down, right? So I would say if you can go to the next slide, sure. I'm going to start with rates because I think that's a real hot topic with everybody, with Canadian consumers. And I think the biggest piece right now that I say is a responsibility for all of us in the industry is to increase consumer confidence because that's the biggest piece.
Yeah.
It's preventing people from doing things. Now, since I have returned from convention, my phone's been going off the hook with people who are looking for pre-approvals. So what does that indicate? And that indicates that, yes, there are a lot of buyers out there. So who hasn't been able to buy over the last 2 years is individuals who are first-time home buyers. I love your shirt, by the way. I think that's a perfect tagline for everybody right now. But, when we look at the fixed rate mortgage forecast, and I'll talk a little bit about the variable rate, fixed rates are dropping. And it's been a long time, and there was only a real snippet of time in the last number of years where fixed rates were lower than the variable. And we're in that market right now. So individuals, and, the line here, the projection of the fixed rate mortgage was to go way up. Well, the bonds are dropping. So therefore, hey, guess what? The fixed rates are dropping.
Yeah.
So that affects the stress test. So it's actually a better environment today than it was last month. And I think it's going to continue to get even better for our consumers to look to get into homes. If we go to the variable rate slide, the forecast was supposed to be held. And, like we mentioned this morning, there's talks of it going up again. But most people are shying away from variable. That doesn't mean it's not the right product for anybody because, everyone's individually different. But variable rate is not the preference right now. It's probably less than 5% of the people that I'm seeing. Most are going fixed and they're going short term. So variable will come down. And the projections from RBC economists are that, by the end of 23, early 24, we're going to start to see it coming down. Now, coming down doesn't mean in the same rate it went up. So it will be a while before we're back into a reasonable range. And if we look at the economics of it all over 100 years, Bank of Canada wants to be between 4 and 6% as a bank prime rate. We're there. So this is going to be more of the new norm. If we can get consumers around that with the price drops, I think that, the confidence piece is our responsibility to get people confident to buy in this market because now is the time. Yeah. It's the time to buy.
There's a great window right now. And they
Huge
say that
opportunity.
when variable rates are 20% higher than fixed rates, there's a 1 in 7 chance that they will increase. There's a 6 in 7 chance that they will they will get lower.
They will lower.
Yeah.
Exactly. So I think we'll start to, like I said, 2024, we'll really start to see some changes on that. But we don't want people waiting for a year to get into a home, because the need is now. And we have a pent up demand of individuals who were not able to buy during the pandemic.
Yep.
And all of those individuals banked dollars. So let's not forget, we're sitting on Canadians who have had money in the bank waiting to buy. How are we going to get them in the market?
Yep.
And so it's our responsibility to increase their confidence. And that's the only way we're going to win. And I think we all can win in this market.
Right. Yeah.